traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 4 o'clock in New York on Monday, February 10th, 2014. And this is the daily report for gold and silver. We have a nice showing in the precious metals markets pretty much across the board. Gold currently trading $12.74 and change, puts it up roughly $78 on the day. High $78.50, low $67.50. Silver also trading higher this morning and trading above $20. To me, that's a pretty impressive feat. Up roughly a nickel on the day, 20.03, low 19.94, and the high 20.40. So it is off of the highs today. We have the continuation of a nice little rally, and this rally, when we consider the activity in the market, really began at the beginning of the month. We can see these lows that it hit. This is where it really formed a base roughly at around 12.40.45, and from there we have had a series of spikes followed by retracements. This spike here, though, followed by a retracement, and again this spike here followed by a retracement. Retracements have been very, very quick. They have been very, very shallow, and we have seen this market pretty much move up the price ranges. We see it trading closer and closer to what I peg at current resistance, which is roughly around 1280. Now, in terms of where we are currently sitting, when we take a look at this 240-minute chart, you can see that the last high that we hit, and this was just at around 1280, the market did spike up to that point, but came down rather hard, but now is flirting with that. You can see this little bit of sideways action, and that sideways action, is just indicative of a market forming a base. It could be a reversal, but I'm more thinking that it's forming a base. In terms of support in the market, dramatic support in the market, we're pegging it, as we said, 1235, these lows here at around 1240.45, and then again at 47. These are Fibonacci based retracement points, and we look for points that are both Fibonacci based as well as seeing dramatic tops and bottoms in the markets, and that gives us more technical evidence that those particular price points have weight. When we look at this market now, this is the high that we hit, and we can see that we've kind of stalled right below that high. But typically a market that's making a new high will take a couple of stabs at it. Of course, we did enter a long trade in gold, two different price points. Some took the call as an aggressive call, and that was back on Thursday, of course, and then on Friday we issued the conservative call. Both calls are well below where the market is trading. The aggressive traders got in roughly at around 58, and then a little bit higher for the conservative trade signal or trade trigger. Now, the 240-minute chart that we just looked at really illustrated some of the different support levels in the market. We've put up our half-a-day candlestick chart, standard candlestick format. We have one fib retracement. This retracement goes from that peak at about 435 down to these lows. The second time, or that double bottom, roughly at 1286. I've got it pegged here at 1287. So we're really going from this top here to this bottom here. And when we do that, we get a couple of different marks that are important to us. Of course, this is where that 1245 comes from. That's a 23% retracement. I talked about our next real level of resistance being at around, call it 1280. We can absolutely see that when we look at it. These are those two tops that we just spoke about. Let's go ahead and kind of move this chart over just a little bit so we can get a better sense for it. But as I said, you can see that these two tops right now have lined up just under this resistance point. Now, above that, should we break through this particular point, I really believe we've got fairly clear sailing until about 1307 to 1309. It's a 50% retracement, and then above that is 1338. So in terms of our levels of resistance, should this market continue on its upward track, these are the various points that we're going to, I believe, run into resistance. 1280, well, we can see that market has actually done that. If it barrels through there, as I said, the next real level is going to be 1309, and that's followed by 1338. And then, of course, you have this top right in here that is at around 1360. And then on top of that, 1374, that's our 76% retracement of this move here. Now, I was doing some research over the weekend and into last week, and I was just looking at different fib retracements, and just kind of noteworthy, when we take a look at this market, this is a very, very long-term look. This is going back, this is 2003 here, 2004. Market was trading higher, but we're pegging it because it kind of stalled here just under 400, and what we simply did is we did one fib extension and retracement, this particular spike up, 50% retracement. Then when we did our extension, and this is what I find kind of interesting, when we did our extension from our start point here, our end point here, and then we carry it to the bottom of the correction, we get this following readout. These numbers right in here are the result of that readout. And I find it kind of interesting because the 176% really gave us a clear indication of a potential top. And then when we look at the marketplace itself, our 100% takes us at 1362. And so that could be a point. We talked about the 1360 as possibly having a little bit of resistance, and that might be where it's coming from. As you can see, this is that one top we took a look at, but you can see where that comes in terms of an extension. And then 168, that takes us to really the area of these triple tops here. Now, we also did one more fib extension, and that's the next rally up, 38% retracement. And on that one, those numbers are to the right. And the interesting thing there is the 100% extension took us to the bottom of the range. So we have different marks here, but the reason that I find it interesting and noteworthy is because one of these extensions is really potentially coming into play as this market moves higher. If we see this market break above, call it the 1300 in that area, this particular top, 1360, could provide some real resistance in the market. Just food for thought. We'll come back to this later. Now, we are looking at a 3-day chart. This chart has our intermediate count as well as the sub count behind that intermediate count. Intermediate count are these waves here. Waves 1, wave 2, wave 3, 4, and 5. Now, in terms of our sub count, let me change the color for that. But in terms of our sub count, I really started here because this is what's important. We had our A, our B, and our C. That really was the composition of this last wave 4. On wave 5, we've had a 1, we've definitely had our 2, we've had our 3. And the question is obviously, is this part of wave 5, meaning is this 4 and then we'll get a 5th wave down? Or is it likely that at this point we can say that in all likelihood we've gotten a bear market truncation, in that when we take a look at this long-standing resistance line, and I haven't drawn it in exactly proper, but it is just trending just above that point at this point. And so what that would be indicating as a potential model, and a model that probably, I'm hoping, will unfold, is that long wave 3 down, wave 4, truncated wave 5th, truncated, it's only got a 3 count. We are now in an A, a B, and a C corrective period in a bear count. A corrective period in a bear count, of course, is going to be an upward rally, with waves A and C being your corrective waves going against the trend having been down, And then your counter trend, meaning going with the trend, would be your short B right in here. So we'll have to see how this unfolds, but it does appear as though the evidence is beginning to mount for our model of a bear market or a fifth wave truncation. And if that's the case, as I said, we are looking for higher pricing. We had 1309 on this particular set of fib retracements. We get 1302. So a band between 1309 and 1302 is really where I believe this market could go on this particular A wave, if in fact that's what we're looking at. And lastly, I do want to take a look at silver this morning. We have had a dynamic move from the bottom of this range that we have identified, roughly at $19 per ounce, but we've also identified a really strong top, and this top really kind of ends dramatically at about $20.50 per ounce. Now, the high that we got today was close to, and so my question is this market have enough steam to really break through this long-standing resistance band? And this band has been here really through December and the beginning of this year, in which the ultimate characteristics of this market has been that it is stalled every time it's come up to this area. Because I will tell you this, if we get this market breaking through this resistance area, call it 2040 to 2050, to me that would signal higher pricing. That's kind of why I've stood to the side on silver, because as we issued our recommendation in gold, we were very, very close to this top in silver. I'd much rather enter the market after a breakout than get into the market with the opportunity for it just to backtrack down, as we have seen over the last couple of months. We'll see how it unfolds over the next week or so. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.